Hello, fellow traders. 'Tis I, the Rumpled One, coming to you on Friday, March 14th, Pi Day. The year is 2025. Let's talk trading. Weekly wrap up with Walmal. These videos are for educational purposes only. Your results may differ from mine and different from Walmal's. And as a reminder at the end of the week, always have your risk management in place so you never lose more than you're willing to lose on any one single trade. Taking a look at the week, all the gaps have filled now, the weekly open gaps. You can see we are 22 pips above the pounds weekly open, 53 off the high, 75 off the low, and we are in the upper wick zone of the previous week's candle. If we step back, zoom out to the monthly, 356, 357 now above the monthly open, 52 off the high, 357 off the low. And in the daily, you can see we are back inside the opening range for the Monday candle, which is the opening range for the week. We're actually 10 pips below it at the moment. And that opening range for the week is above the opening range for the month, which is above the opening range for the year. And for the year, 425 pips above that yearly open, 54 off the high, and 836 off the low. So you can see so far we are expanding the range for the year. We had an inside bar yesterday. We broke out barely to the downside by about 3 or 4 pips, and we're in that inside bar from yesterday. We are above the monthly inside bar 14 months ago and the weekly inside bar from 11 weeks ago. For the range, Walmal, we only have 42 pips of range here, but we've got a bunch of pairs over 100. Most of them are the yen pairs. Looks like every yen pair is over 100 pips. Wow, the euro yen's clocking in at 207, and it's leading the pack.
That's interesting. That's an unusual event.
Yeah, and
Normally,
considering we had red news,
yeah,
yeah. And for the gold bugs out there, anybody watching gold, gold hit 3,000. It's last time I checked, it's pulled back just a tad. And for the pound, the buy zone, you can see here we crisscrossed that daily open a few times, and we got into the actual buy zone and sell zones, and then it reversed. So it was pretty much range bound, and I guess that's why you cleaned up today, Walmall.
yeah. You know, it's just I love it when you're sitting out there and the market's just moving back and forth between two levels. I mean, today it was moving back and forth from about 32, 33, something like that, up to about 52. But more likely it was more like about 47, which is back and forth, and you can just keep on taking the trades. Once it hits the top, take it to the south. Once it hits the bottom, take it to the north. And you keep on going back and forth, and you can rack tips up doing that.
Yeah,
So
and it's funny you say that because I have the rat zone chart up on using 15-minute candles, and you can pretty much see the highest open over the past couple of hours on the M15 was at 46, and the lowest open was right there at 37. So you could have just played because there was wicks above and below those levels. You could have just pretty much played that like a violin.
yeah, and it's funny because if you remember earlier in the week, I had made the comment that so many of these different methods that are out there, it points to the same exact lines. It's
Mm-hmm.
just a different way of looking at the markets, a different perspective. But it really comes down to the same thing over and over again. And that is, you need to just find something that goes and puts a horizontal line out there. And then once it does, you go and take the trade when it crosses over it. And it just, it'll pay out for you all the time. And, that's the great thing about it. And and you just can't be greedy and just say, okay, I'm going to take X number of pips, or it makes sense that this is where it's going to end. You just take it till it gets to the point where it makes sense that it's not going to go any further. And you get out and don't be greedy.
Yeah. And the Bambino Flex indicator said to go north. Um, Pivot Trading Plan said to go south at the pivot. And that south at the pivot, which was at 29.49.9, would have paid off definitely. And looking at, so we did take out today's pivot. For the week, we've missed that pivot. And for the month, we've missed the pivot. So far, we've got some pivots to the downside that need to be taken out. Um, it looks like yesterday's candle was not only a inside bar, but it looked like it pretty much was a doji. Um, we had an open at 55.6 and a close at 55.3. So at 55, that's pretty much a doji. So who's pretty much been in the wick zone all day long.
And we will be unless it goes and breaks the high or the low, we will be in that wick zone.
Right. Yeah, so in fact, it's actually taken the statistics down into the 66% level because of this. That's too funny. And so
We
for the
should have.
week, go ahead.
I was just going to say, and we do have red news in about 5 minutes, so we will probably still be on this video. So we'll go and see if it goes and breaks the highs and lows of that doji from yesterday.
Yeah. So far today we have, or for the week, we have 127 pips of range, which is really low. 16 percentile over the last 12 weeks. High minus previous high 44. We did not break the previous low. Right now, high minus close is 51. Close minus low is 75 for the rats. And for the weekly crossover traders, high minus open 75 to the north and open minus low 53 to the south. So once again, horizontal lines can pay off. Walmal, we had a trader wants to know, I guess, ways to, trade yourself out of a loss. Um, I'm kind of hesitant to to say that because it can really get you into trouble if things keep going against you, and
Well,
it's almost better to scratch that trade, take a small loss, and then make it back on the next trade or two.
yeah, I was going to say the same thing. If you're a new trader, or even an intermediate trader, whatever that means, I would say just take your loss.
Yeah,
You're not
rather than
you,
try and
you,
yeah, if you're
you're not
struggling, yeah,
yeah. If you're already struggling, you know, this is a level of complexity that's just not worth looking at. Now, once you get to the point where you know where you've been trading for a while, and more importantly, you've been profitable for a while, I think what's going to happen is trading out of a mess is going to become second nature for you, and you won't need me to help you. I mean, it'll just be you. And part of it is that once you get to that level, you've been trading a particular instrument for a while, a long enough period of time that you understand the instrument and how it moves. What'll happen is you'll just see, okay, I need to do this, but the instrument more than likely is going to do that. It's going to do this, and therefore I can go and take advantage of it. And it's going to be some things that will allow you to do that. Some of the things you can look, I'll give you one hint. The one hint I'll give you is take your signals. Okay, take your signals, and then but that means that when you went into the trade in the first place, you better not have gone and shot your entire load because
right,
you can't take a second trade if you don't have any room to go and take it. You don't have any room to take on additional risk.
yeah.
So, again, risk management.
Yeah, so example, if you're using flip-flop boxes and you're going to the north and the first one goes against you, you basically sit on your hands. If it doesn't hit your risk parameters and to take you out, And then you can enter the second trade, and maybe even a third trade, and then just sooner or later, it'll just seem that it'll go your way. But
Right.
once again, it's that risk parameter. So if you're willing to lose $100 and you're already down 50, and then you get into another trade, now you're down 80. If you get into that third trade and you go down 101, guess what? Because
You're
if you,
out.
yeah, because, and then what'll happen is it will go your way. You will kick yourself. And then the next time you get in this situation, it'll go to 101. You won't get out. And the next thing you're looking at 150 or 200 loss. That's just the way it seems to go.
Right. And that's why you got to go on that. So the whole thing is it always comes down to the same thing. All the time: preserve your capital and control your risk. That's what it always, always, always comes down to. The most important thing. And I know I've said this a million times on here. Exaggeration. But the reality is simply this: I don't care what your method is for getting into trade or getting out of a trade or whatever. If you don't manage your risk properly, you will lose money. You know that's an absolute fact. You don't manage the money correctly, you will lose it. You could have a methodology that wins 99.9% of the time. There's no such thing as a methodology that wins 100% of the time, but you could win 99.9% of the time, and eventually over time, you will lose your account
Yeah,
if you don't manage your risk.
yeah. Because all it takes is just that one time.
Exactly right.
Yeah. And
So
I guess, one of the other things is, about taking the signals. You just really have to trust the system and not rush it, not be late. You have to be on time.
that's exactly right. We got news in 16 seconds.
Yeah, here we go.
See what happens here.
And the other thing is you have to be willing to take, a couple of pips, a profit. Oh, it's
Yep.
pushing down. It still hasn't made a new low for the day, that is. This price doesn't know what it wants to do.
The consumer sentiment went down from last month. Um, so you would think this is going to run up in the upward direction, but it missed, but it didn't miss by a tremendous amount.
Yeah, and if there's any of my stock trading buddies out there watching the video, I maybe sometime I'll start doing, maybe take one day a week and start doing some stock videos, since I have been active on Stock Fetcher, writing some filters to show which stocks, like if you buy at the close, chance that you can make, 2 cents or more the next day. Um, been working on those filters and just having fun. And another thing is tracking all those people that say, hey, these are the 5 stocks you should buy, and putting them out there, displaying them in a filter, and just saying, come back at the end of each week and seeing, hey, are these guys, are they on to something, or are they just full of it? Just a bunch of talking heads. Um, Show you here, almost out of time. March, we have 410 pips range for the month, and that puts us at the ATR percent for the month is 98. So we're almost there, traders. So I hope everybody's had a profitable day, week, month, and year so far. And I wish you all a fun and safe weekend. And I want you to always remember and never forget, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're trading stocks, may all your fills be complete. This is the Rumpled One, over and out.